10-year note yields opened the session very close to unchanged, hovering at 427, and then things moved higher. We saw yields get all the way up to 439 today, just shy of the range that we talked about earlier in the week, that 420 to 440 range, before closing out the day at 438, up about 11.5 basis points from Wednesday's close. Now, early in the morning, we saw UK and US trade talks pick up, which helped prompt stocks to move higher, and that pushed bonds lower. But ultimately, it was later on in the day, we got a poorly received 30-year auction where we saw continued waning demand, especially from the foreign investment sector. And that is something the Treasury is going to have to deal with as they continue to issue more and more bonds, but ultimately seeing yields prop up, hold near the highs of the session, and close out at 438. Again, up about 11 basis points on today's session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll see volatility was actually lower today. Typically, as we see yields move higher, we see volatility moving higher, but that wasn't the case today. We saw the yields moving higher and volatility actually nudging lower. Lastly, let's talk about what we have tomorrow. Tomorrow, there isn't much on the data calendar, but we do have a slew of Fed speakers as they return from their May FOMC blackout. We do get them scattered throughout the day. With the Hoover Monetary Policy Conference, we'll see major speakers mid-morning and then later on in the evening.